All right. First things first. Happy Labor Day, everybody. And today I will be doing the Labor Day sale for Bank Trade Alerts. And this is the first time I will ever be giving a 10% discount on the annual plan as well. So there will be a coupon code for 50% off 1 month or 10% off the annual plan. And you can see those coupon codes on the screen or in the description below. And if you're already an annual member of Bank, you can still claim the discount for your next year. So take advantage of that deal because that is the best discount you're going to get on Bank. And if you're already going to commit for the full year, you might as well take advantage of that discount. All right, so first we'll look at SPY, and we can see SPY did go up 0.19% on Friday, and we still have the bull trend with all of the moving averages positively sloping and stacked to the bullish direction. So it's really as simple as staying bullish in SPY while it's above 448 because we still do have a gap to fill above there at 455, and while price action is in this bullish momentum, we are very likely going up there to fill that gap. Now, if at any point SPY breaks the support at 448, that is a very early warning sign that you need to get risk off because it's possible we're coming all the way back down to 442. And if we break 448 of support and then 442 of support, we're very likely going down to 430. So as I always say, follow the price action. And right now the price action is bullish. So you should not be assuming we're going to 430 unless price action proves otherwise by breaking through critical support. So stay focused on the price action, which is bullish above 448 for the higher prices of 455 and then 460. And we're not going to be looking for lower prices until we lose that support at 448. On the NASDAQ 100 triple Qs, we were down 0.11% on Friday, and the triple Qs hit their upper gap price target, which was that gap above 380, which is more evidence that SPY is likely going to fill its gap next. Now, the triple Qs are bullish as long as they're above 375, so just like SPY, do not assume we're going lower unless price action breaks that support level. And in the triple Qs, the critical support will be at 375 and then down here right around 370. If we break 375, I would instantly get a lot more risk off because you can always jump back in if price action can hold above that level and continue to prove we're putting in higher lows and higher highs. So above 375, we're bullish with the next upside targets at 383 and then 387. On the Dow Jones, we were up 0.34% on Friday, and the Dow Jones is trying to fight off this bearish engulfing candle that we had on Thursday. And the critical support in the Dow is going to be right around 348. Below 348, we have more critical support at 346. But again, you really need to get risk off very quickly if we lose this support because we have the bullish configuration. There's no real reason we should lose support in the event we're staying bullish. So if we lose a support level, that is a very good warning sign that this is likely a lower high before we continue lower. And in the Dow, if we were to continue lower and lose all of the critical support, we still do have that gap to fill below 340. So again, do not assume we are going down to fill that gap unless price action breaks down below support. And in the Dow, that is 348 and 346. The next upside targets will be 353 and 356. On the Russell 2000 IWM ETF, we were up 1.19% on Friday, and the small caps are on that weekly chart analysis of looking very bullish. And the price action on the daily chart is now starting to reflect that with 4 daily closes above 188. 188 is the critical support because if we break 188, we're coming all the way back down to 183. And then if we lose 183, we have a gap to fill down there at 176. However, that is going to require price to break critical support at 188, and we are still bullish while price is above 188. The next upside target will be right around 194 to 195, and then we likely start pushing into the 200s. On the ARKK ETF, we were down 0.3% on Friday with the third day in a row back above all the moving averages, so we are still bullish as long as we're trading above 42. If we break support at 42, we're likely going all the way down to the gap fill below 36, so that is a very critical support level. The next upside resistance is 44.5 and just below 46. On the VIX, we continue to break down below 15, and the VIX is now trading in the low 13s, and this is exactly what you're going to see in a bull market with a very low VIX because there's very low fear. Now, do keep in mind, while the VIX is at this lower level, this is where we last found support in the high 12s and low 13s. So if we see a little bit of spike in the VIX, that's more than likely going to be a pullback in the indices, and as long as we hold critical support, that is a buying opportunity, knowing that if we break support, you need to manage your risk accordingly. On Bitcoin, we're currently trading just above 25,000. And the critical support will be this level because if we break 25,000, we're likely going all the way down towards 22,000. This is still lower highs and lower lows, and we're not getting bullish now until we can break above 28,000. On Tesla stock, we were down 5.06% on Friday, and Tesla lost that support at 255, which meant we were coming down towards support at 245. That is exactly what happened, and now that we're at support, we need to see if we're going to bounce and continue higher, or if we're going to break support and continue down towards that gap fill below 218. So for that reason, Tesla has critical support at 245, and if we break 245, you're looking for strong support at 230, and if we lose all of that support, you have the gap fill below 218. Upside resistance to break is now 258, and if we break 258, we're likely going straight to the 270s. On Apple stock, we were up 0.85% on Friday, and Apple is getting very close to the price target, which is this gap fill just above 190. And now that these Bollinger Bands are expanding, it's going to be very easy for Apple to go up there and hit that target and fully close that gap. The question is, after the gap fills, are we going to pull back down towards 185, or are we going to continue to climb higher? And you're only going to know that by watching the price action around this level at 190. If we instantly start getting rejected, there's a good chance we're pulling back to retest the breakout right around 185. And if we continue higher, your next upside targets are 194 and 197. So jumping back over to the S&P 500, this is still a textbook bull trend, so you need to stay bullish while price action is above support. And if we lose support, then we know the next leg's lower to pay attention to, and we can instantly adapt once the price action loses support. Don't make the mistake of assuming we're going lower while we're in a bull trend, and this is very clearly a bull trend, which is evident by the price action above all the moving averages, and we can clearly see prices back to looking impulsive. Impulsive bullish price action means we're continuing to push higher in this bull market, so continue to follow what the chart is saying, and that means you're going to have to block out all of the other noise. Don't forget to take advantage of the Labor Day sale for Bank Trade Alerts. This is the best discount you're going to see on the annual plan. So if you're committed to trying it for a full year, now is the best time to take advantage of that discount. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.